Good morning, everybody. Mike Vacchi from PrinceTrader.com with your Friday morning non-farm roll payroll morning pre-market webcast. Okay, plus 236,000 jobs, 7.7% unemployment rate. That's a big number. And I mentioned to my subscribers before the number came out is look, you're trading on 5-year highs. It better be a good number, and they got a good number. If we follow through on the number, that remains to be seen. What we do know, and I'm quoting June numbers now. June contract. We're now into the June. The range on the June contract is 1547.75 on the up. That was our NFP break when the number broke. That was the high, and we're working on 1541.75, 1542 on the downside. So lock those numbers onto your charts. And we'll see if the bulls or the bears can either take out that range high or range low, and we'll work from there. Typically, the way that goes is if you see a break above, typically the area would get retested, and we would continue on to higher levels. If it's a breakdown, typically 1541.75 would be tested from up above as resistance, and we would fall down farther. So. Those are a couple big numbers to watch out for today. I'll have my volatility levels out for subscribers and everybody over in the chat rooms, when the market opens. But the key thing to understand is that pop on the March contract landed up at 1553 half. And 1554 to 1557 was an area that a lot of people were looking at. Markets are not perfect. Does that mean we're done? I don't really think we are. There isn't an instinct in my body that tells me that we're done. And maybe that means we are done, because it is so simple to just be long. And it's worked, and it's worked for a long time. It's worked from 1382 on the March up to 1553 half on the March contract. So I'm very cautious. If you want to buy this, and we have support down at the 1542, 1541.75 range bottom area, lower part of the range today, you can take that for a long. You absolutely can. You just need to use a stop underneath to control your risk, just in case that non-farm roll pop was the end of it. If you want to get short and you didn't have a order sitting up there, I would wait for one of two things. Either a retest of the range top that fails, okay, because then your risk is defined, or a breakdown from the bottom of the range that then retests that 42 level, where the 42 level is established as resistance, and you can short there, with a stop up above the 42 area. So, that's a couple things that you can do today if you want to be long, if you want to be short. That's how to do it and control your risk rather than just, closing your eyes and saying, okay, I want to be long now, or I think we're done, because that's really not what you should be doing with your stuff. Okay, everybody have a fantastic day and a fantastic weekend. Mike Vacchi for PrincetonTrader.com. I will be back Monday morning with another webcast. Trade them well, everybody.